Right, today I want to talk about the US presidential elections, economic and global implications of a Trump or Harris victory. The 2024 US presidential elections remains a close race, with prediction markets a day before elections reflecting a slight edge for Trump on platforms like Polymarkets and Kalshi, while Predict It gives a narrow lead to Harris. National polls, on the other hand, is different. It's indicating Harris' victory, where Harris is gaining grounds, especially in historically Republican-leaning states. Polls over the weekend showing a stronger performance for Harris, especially in traditionally Republican-leaning states like Iowa, briefly raised her odds of victory to nearly 50%. On Kalshi, up from 36% the previous week. Now, given the volatility in these indicators, the election outcome is unpredictable, with both candidates representing starkly different economic policies. Now, Trump is focused on aggressive tariffs and lower corporate taxes, while Harris proposes consumer-focused programs and continuity with Biden's trade policies. So what are the US dollars indicating? The US dollar right now has appreciated in anticipation of a potential Trump victory, attributed to all this protectionist the policies and fiscal spending, which tend to increase interest rates, making the dollar more attractive, right? And we are also seeing currently the US dollar is appreciating as well as the US dollars in the forex market. And this is because currently the Donald Trump is leading in the election, whereby he has 154 leading by 154 so far, while Harris is 53, but it's still very, very early. The move up in the US dollars right now is based on whichever is winning at the current moment. That can change because we still need 200 the candidates still need 270 to win, and there are still many blue states, blue states that we probably Harris will win. That hasn't been tallied yet. Okay, that thing can change anytime. So Trump's previous stance on a weaker dollar to support exports contrasts with actual appreciations of the dollar under his administration. A continuation of these policies may keep the dollar strong, potentially pricing US goods higher globally. Now, in contrast, Harris's alignment with current economic policies suggests stability, likely maintaining the dollar's value without the volatility associated with Trump's tariffs. Now, what about the impact on the US market and dollar? Now, the Trump's proposed tariffs are among his most contentious policies. His plans includes a baseline 20% tariff on all imports, and that is around the world, okay, including Europe, with up to 60% on goods from China. Now, this could lead to inflationary pressures, with the Peterson Institute for International Economic estimating that US inflation could rise to between 6 and 9% by 2026 if these tariffs are implemented, up from the current estimate of 1.9%. Now, these increases could prompt the Federal Reserve to raise interest rates, further strengthening the dollar. And we can actually see that with the bond yields itself. We can get the clues from there. Okay, so Harris has warned that Trump's tariff would act as a hidden tax on American households by raising prices on imported goods. Now, in contrast, she's expected to maintain existing tariff with a pragmatic approach, aiming to avoid inflationary shocks and protect consumer spending power. Now, her administration would likely continue subsidies for US infrastructure and clean energy, keeping inflation more controlled and supporting steady economic growth. So what are the potential outcomes for Ukraine and Gaza wars based on candidates' promises? On foreign policy, Harris promised to uphold US commitments to allies, including sustained support for Ukraine and a balanced approach to the Middle East. Harris has pledged continued support for Ukraine, though congressional skepticism may limit extensive funding. Trump, on the other hand, has proposed a rapid end to the Ukraine conflict through negotiations with Russia, a position that could reduce US financial support but might weaken Ukraine's position. In other words, Ukraine may need to cede some areas to Russia. In the Middle East, Harris supports a balanced approach with aid for Israel and humanitarian support in Gaza, aligning with Biden's pro-Israel but diplomacy-focused policy. Trump's rhetoric, however, has been more aggressive, implying reduced diplomatic engagement and solid support for Israel without pressing for ceasefires. The resulting instability could lead to heightened oil prices, impacting global markets and introducing a risk premium to energy-dependent industries. What are the overall implications for the US stock market? Trump's economic agenda of tax cuts and deregulation has the potential to boost short-term market growth. His proposed reduction in the corporate tax rate to 15%, down from current 21%, could stimulate corporate profits, driving stock prices higher. However, his high tariffs plans introduce risks of inflation and cost increases that could lead to market volatility. If the rest of the world retaliates against Trump's tariffs, US GDP could decline by 1.3% by 2028, with inflation increasing by up to 4.3%, according to Bloomberg Economics. Now, Harris's policies focus on controlled spending and supporting consumer affordability are expected to stabilize market conditions, especially in healthcare, housing, and technology. Her approach may avoid significant inflation spikes and provide steady growth without the volatility introduced by high tariffs. However, under both candidates, rising national debt remains a challenge. Bloomberg Economics projects that Trump's tax cuts could push debt GDP to GDP up to 116% by 2028, while Harris plans could see it at 109%. So what's the conclusion so far? Ultimately, both candidates aim to strengthen the US economy, albeit through vastly different methods. Once the election dust settles, economic fundamentals will likely regain importance in driving markets' direction. The current strong returns reflect a backdrop of steady economic growth, corporate profit growth, decreasing global inflation, advances in artificial intelligence, and stimulus measures in China. Over the next 4 years, the US equity markets may be more influenced by the success of AI and technological innovation rather than solely by the presidential outcome. Okay, so that's my report for today.